Hello, Gary Wagner with WFGForex.com, your daily market forecast for Forex Gold. It is the second day of April. It is Friday, Good Friday, as a matter of fact. Good Friday to all of you. For all intents and purposes, the market is closed. It is currently around 12:30 Hawaiian Standard Time, and we'll get right to the board. Market closed today at 1125.35. You notice that I have a few lines up on the board, and we're going to go into detail. For our long position, I just kind of want to, as a weekend review, talk a little bit about it, and then we're going to move our stop up and talk to you about what I think we should be doing next week. As you recall, we initiated a long buy signal. This is a week ago Thursday. It started after this sell-off. We had this long black candle, and then what appeared was a candle that I have called an inverted hammer, part of the umbrella groups, hangman, shooting star, inverted hammer, and hammer. Now, what we noticed on this particular shooting star was we were looking at an area where we found support. Let me just move this back a little bit so that we can see where I drew this from. And what I noticed on that day when we saw the inverted hammer was that if we take and draw a support line from the body of these lows here and carry that through, it matched up pretty closely. We did find some support. I'm going to talk about Fibonacci in a couple of minutes. So this pattern also is what we call a on neck pattern. In other words, after a market is traded lower, you get a long black candle, and then the following day you would get a white candle. Now, for it to be what's called a piercing line, of course, is much stronger than a on neck pattern. The market must open at or below and close at or above the midpoint of that prior black candle. If it closes below that midpoint, it's called an on neck pattern because it opens at the same point and then closes lower. So we had the inverted hammer. It matched with our support line, and then the call was based on a confirming candle. A confirming candle in a bullish reversal signal is always going to be a white candle with a higher high, a higher low, and you want it hopefully to take out the open of the black candle, which of course it did. Now, we told our traders as it was trading that as long as it continued strong in Asia to go ahead and enter that position. We then entered that position. Traders that got in at around 196, 197. We initially placed our stop at 1085, and that's because we had to place it below the low of this candle. Now, we recently looked to see the market trade higher. And in fact, it continued higher the next day, but it ran into a kind of a stalling pattern where it formed a base. The interesting thing about the base is the base came at exactly the 50% on a Fibonacci retracement level. Of course, we saw a breakout over the last couple of days. This is Friday's activity here. This is Thursday, and this is Wednesday. So, traders, what we are recommending is that we move our stops up to 1111. That's 1111 on a protective stop. But there's another way that we can play this, and I'm going to talk to you about it towards the end, because it might be a situation where if we do stall in this area up around the tops and where it's hit, it might be wise to take profit. So I'm going to talk to you about that in just a little bit. Now, I've gone ahead and put up our Fibonacci retracement levels. And again, traders, just to show you where we're drawing them from, back in September, I used this low here at around 990 and our record top at 1221. When I do that, it creates a couple of levels of Fibonacci retracement. Of course, we have our 23% right here, our 38% right here, our 50% right here, and our 61% right here. Now, here's what I'm finding to be interesting, and we have been watching this and talking about it all week. It seems as though we're trading in a classic Fibonacci pattern in terms of retracement. You can see this little move here. It goes up to a 38%. Here, it comes back down to 50. Here, it goes back up to 38%. Here, it tries to test that 61. And right now, we're on this particular upside up wave, and it is just stalled right around that Fibonacci level right below it. That's the 38%. Now, we do have superlative or some resistance here, and that's what concerns me in terms of where the market is. If I draw a resistance line, and we talked about this 1125 over the last week, you notice that there are a series of tops in which the market could not take out this particular area. And the other thing that we're looking at is we did form on today's candle what I'll call an incomplete or a dark cloud cover. Now, a dark cloud cover is a pattern in which after the market has gone up, you get a long white candle, and then the market opens at or above. It's got to be at, because it's a 24-hour market in the Forex, and closes at or below the midpoint. Now, in our research that I've done when we developed the program called the Candlestick Forecaster, we found that there were many calls that were very, very precise, but they were not complete dark cloud covers, so I labeled that an incomplete dark cloud cover. Now, as in any bearish reversal pattern, the same thing holds true. Before you would actually initiate a sell signal, you would wait for a confirming candle. We'll take a look at this top. This is absolutely a dark cloud cover. So you have the market that's gone up. It hits a record high here. And on the following day, it actually opens at, but closes below the midpoint of the prior day trading. Now, you do not take the call then. You would have to take the call when it has a confirmation. In this case, you got the confirmation on the prior day. Granted, the market went down $48, but if you go back to our original signal, we actually issued a sell signal right here. We did not issue it here because we didn't have the confirming candle. We actually issued a sell signal in the gold based on that. We also have been talking about the stochastic oscillator, and for those of you who have been following each day, you realize that every day over the last 4 days I have been speaking about the point in which I'll feel more comfortable when the stochastic percent K does in fact cross over the slower percent D. Well, traders, we actually got that today. Percent K at negative 0.26 and percent D at a negative 1.12. So they just have crossed. Now, the last thing that I want to kind of discuss today is a couple of our technical indicators. I've got two moving averages up, the 50-day simple moving average and an 89-day simple moving average. And the one thing that I do find interesting right now is that our closes of recent have closed well above both the 50 as well as the 89. I use 89 because it is a Fibonacci number. Traders, all in all, it was an excellent week for us in the marketplace. We positioned ourselves a little over a week ago on the long side. We stumbled through as it stalled at 1100, and we saw some nice moves up. As I said, I do have some concern right now, and that concern is that we have stalled right at a potential resistance point. Our next resistance point that I would be looking for is going to be here, and if the market continues higher, I'm looking for that 140 area, and then ultimately just above 160. But we're far from that right now, because before we get to these particular levels, we have to be able to break out of this channel. So what am I looking for? Well, Sunday is Easter, so we're looking at quiet activity, of course, and what we really want to see is how the market reacts. If we get a higher open and the market can carry through and break through this resistance, area, I'll feel very, very comfortable. I'll look to continue to trail up the stops, and I'll look at the areas that we talked about. If in fact we get a scenario where we get a confirming candle such as in here or such as in here, we might want to pull profits and then look to reposition ourselves on the long side of the market once we get a corresponding buy signal after the market trades back lower. All in all, I am a trend trader. I like to trade and stay with an active trend as long as you can. However, we have to trade in the way that the market dictates. And as long as the market is going to show me a tightly range trading pattern in which it does not seem to have the ability to break out either to the upside or the downside, we've got to be effective in trading that range. We also want to have the ability, if the market does want to continue higher, to begin to scale and add positions. And we'll talk about that next week. What we're going to look to do is, if in fact we can see it take out certain areas and move higher, we might want to scale and add to our positions. Overall, long term, fundamentally, I'm extremely bullish on the market. But I am a technician by teaching and trade, so I've got to give you signals based upon Japanese candlestick charting as they were taught to me. So when we see a sell signal, I'm not going to double guess that. I have looked at these markets through candlesticks for over 20 years, and they have never failed me yet. The candlesticks seem to be a decisive way to trade in the market. So we've got a good trade on our hands. Easter's coming up. I wish you all happy holidays. We'll see what happens. We'll have our next daily report come Sunday. Happy Easter, and as always, wishing you good trading. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. This was the Weekend Review. Bye-bye.